in Europe, we did have a whole host of different gaps that we had to deal with. We had a mosaic, in fact, of financial reporting requirements. And for a multinational company, a company with the subsidiaries in different European countries, that's been a really big challenge to try and comply with various regulatory and accounting requirements. So, of course, the main benefit of IFRS is getting everyone to the common base, achieving greater transparency, greater comparability of financial reporting. And with that, of course, the key benefit is great accessibility of finance. So for companies trying to raise finance in the EU, having that common base, that commonality of the standard, the same starting point, made a real difference. But again, is that just the EU? I think that's much broader. Having a common accounting language in the EU basically meant that EU companies trying to raise capital abroad, raise capital globally, had a better starting point. Their financial statements could be understood better. They were far more accessible to the international investors. That is what we would call real transparency. And I think in that respect, IFRS really achieved its objective, improving the liquidity in the financial markets in Europe. Of course, another great benefit for companies from the preparer perspective is the reduced cost of compliance. So if you're a large multinational and all of your subsidiaries are following local GAAP, they've got to deal with a consolidation package that involves 20, 30 different gaps to cope with. Well, that was quite a costly exercise. So now, of course, they're all starting from the same point. And actually, what is quite interesting to see is the fact that IFRS is quite often used for management accounting purposes. It is used as the basis set of standards for deriving the data that then the management uses in order to focus on the key KPIs to manage performance management of individual subsidiaries. I think IFRS needs to be seen as very much part of the package of the measures introduced in the EU. IFRS didn't come in as just one single initiative. It came in as part of the other regulatory measures. And if you think about where it all came from, where it all started from the Lisbon Treaty. It all started from, the trying to improve the transparency and the efficiency of the financial markets in Europe. And so, of course, if you take it from that broader picture, it came in with the regulation around what do we do in corporate governance arena, what do we do in terms of the actual regulation of financial information in the European financial markets, and then of course what do we do for standards, accounting and auditing standards. So if you take the entirety of the package of reforms that came in Europe, I think that's where the picture becomes much clearer. So IFRS has played a very important, a very significant part in that respect, in that it established a common base for companies. So the other measures could be considerably more effective. Because how can you talk about the commonality of regulation? How can you talk about effective corporate governance regime if companies are all starting from a different point in terms of their financial information? So it played a very significant part in that respect. And so I think when we talk about IFRS, it's very important we talk about it as part of the regulatory measures that came in Europe. We do have variations in the way companies apply IFRS within a particular member state. So if your historic gap or your regulatory regime led you to choose a particular accounting policy, it is quite conceivable that you continued with that accounting policy within the IFRS framework because that was still compatible and consistent with the IFRS framework. Equally, of course, it is possible that your competitor in a different jurisdiction would have chosen a different accounting policy. So we don't have an absolute comparability. But what we do have is certainly a much more improved comparability. And the time passes by, the investors ask questions, and they questions around those accounting policy choices. And I think some of those dialects do iron out. But I think it is important to recognize that IFRS is a principles-based set of standards, and therefore certain dialects will inevitably exist, and we will continue to see some variations. One of the probably most frequent complaints from the CFOs that I hear is very much that IFRS is too complex, too cumbersome. It doesn't allow them to tell their story effectively. And what they end up with is pretty much a collection of data in the financial statements that they really cannot use in their communications with the investors. But the disclosure initiative is certainly heading in the right direction, and certainly what I'm hoping for is that working on that disclosure initiative, the IASB comes up with a clear set of principles that are going to help us to focus on the information that is important, that is going to give companies the flexibility to report much more clearly in a concise fashion. And I think that is important because I think the criticism around the complexity of IFRS is coming from that sort of dissatisfaction with its ability to allow companies to communicate effectively.